back to the beginning of this video through time and space to show you how to read a footprint volumetric number / bar chart, whatever, a lot of different names. I'm not going to get too balls deep into this because it's literally just to show you what I'm going to be back testing. So I just want to show you how to read it. There are a lot of different reasons. These bid and ask don't like directly represent buyers / sellers. I think trading would be a lot easier if they did, but bid is market sells and limit buys, because those two orders kind of match up. Ask is market buys and limit sells, because those two kind of match up, right? And the way you read this is, again, I just don't, if I get into why, it's going to get crazy. The way you read this is actually diagonally. So you're comparing these two numbers, these two numbers, these two numbers. And what that actually means is that at the top of a candle, this should be 0. This is a totally different concept. It's not always. And at the bottom, this should be 0. It's not always, because there's nothing below it to trade into, you know. But that's it. That's how you read it. And we're going to get into like the different concepts that stem from it. What does it mean if this one is a lot bigger than this one? That looks funny. Yeah, you can get so deep into it, but just remember, like, this is aggressive buyers. This side, this is aggressive sellers on the bid, because they're crossing the bid to get a worse sell price because they think it's going to keep going lower anyways. This is aggressive buyers on the right who are, remember, buy low, sell high. So what does it mean if someone's buying higher? They're being more aggressive because they think price is going to move up. So buyers on the ask are aggressive. They're hitting market order. So if price is here and you're like, I really want to get in long, I'm going to buy right now, no matter what the price is, you're crossing over to the ask to pick up a contract at this price. Okay. So that's basically it. Let's go. We're doing it. We're doing like an actual tutorial kind of thing here. First sip of coffee on a Saturday morning. Yeah. I got this soup cooking in the background, and I'm going to teach you how to read some order flow charts. So this is going to be like a primer, because I want to do like actual back testing. Yesterday was Friday, the 17th of January. And there was a lot of good, I can only look at MES right now because I don't have the full data, but for Sierra chart. But there was a lot of good, like, kind of supply and demand-ish stuff going on MES. So I want to like zoom into what was actually, going on. And because this is why I got into the order flow in the first place, is because I wanted to kind of dissect the supply and demand strategy we've been using, and see how we can hammer it down, evolve if we need to. So this was ES yesterday. So you can see kind of just nice trending day. A lot of kind of like supply and demand stuff going on there. A lot of boxes. So we're going to look at those in a longer video later today. I don't know if it'll come out today or tomorrow. It'll come out this weekend. But I want you to be ready for the order flow that we're going to be looking at in that video. Okay, kid? This is what order flow looks like. And I think Sierra chart, I love how freaking customizable it is. Like, these are all my things, and this, and does it look dated? Yes. But it kind of reminds me of the Warcraft 3, like, mod maker. So I kind of like that. A little bit of nostalgia there. But let's get into it. I want to show you what we're going to be looking at to make sense out of this mess. Because when I started, I was like, what the fuck? I couldn't even get through like a 10-minute video trying to explain it. But just expose yourself to it more and more, and you'll start to get it. So there are a lot of concepts to grasp that, when combined, will give you just better. It's just confluences. It's just trading. It's just more confluences. And I guess the more the better. So you can kind of make up a strategy on how many of these you want to see. You can weigh your size based on how many of these you see. You can look for new ones, I just like having all this data. I'm a data analyst by trade, and I just like looking at all these numbers. Oops. Not myself, though. So first things first, let's just get into these concepts. Delta divergence. So, and I worked really hard on this drawing. We're familiar with, a lot of people are familiar with delta. Delta is the cumulative, it's the measure of buyers versus sellers inside of one of these bars. So, and it's mapped out below each bar on this chart. So this bar had 204 delta. This bar had 94 delta. And this is effectively a good, like anything else in trading, just because you see green delta doesn't mean it's going to go up. What we look for with delta instead is changes from, you're weighing the actual price action. So is it going higher or lower, with how the volume has changed within a bar. So currently these bars aren't colored. If you see these little green boxes on the side, that would represent like the normal kind of open, high, low, close candle that you see. So we don't know. I think one of these two is, I think this is a red bar. It doesn't really matter though. So basically delta's red. It makes a new low, right? This price starts trading lower than this, and delta turns green. And then you see the next candle, it doesn't go lower. It's still green. That's bullish delta. It's just telling us it might go up. So basically, and vice versa, as with everything in trading. New low, but delta goes from red to bullish. And vice versa, new high. But if delta's going from bullish to bearish, that's possible reversal sign. These were a couple trades that I marked up that I wasn't really going to show because it looks like just schizo writing. But if we focus on the delta, you see you have 3 back-to-back bearish deltas. What you see here is that it goes lower. It doesn't turn green, but I mean, it's -3. So you go from -236 all the way up to -3 with a low. And you'll see the other confluences in here. Later on, maybe we'll come back and look at this. So you see this big jump in delta at the low, and then also take it with combination with the next one going higher and delta continuing higher. So that's pretty good. So just looking at how delta is trending. Volume profile. I feel like this is a big one. This is like volume at price. A lot of people know what volume profile is. It's like the bars across across your chart on the side. It's volume at price analysis, basically. And it has a few different concepts that I kind of threw under there. And I don't know, I'm not an expert on volume profile. I want to get better at it. There's a PDF I want to read. There's a couple of videos I want to watch because I think it's pretty significant as part of these strategies. I think even if you're just trading supply and demand price action, I think like volume profile can give you a good edge in just pure price action trading. So the first thing we want to look at is the shape. And this one's a little less hard and fast, I guess. So what you can see, I don't know if I can like free draw on this chart. So here's your bar, and then the volume profile on this chart is extending to the right of the bar. So this is everything that happened in, oh, great. Okay, that sucks. Ignore that completely. These bars are everything that, so this is where the most volume was traded. That's the biggest bar in this candle. So that's where the most volume was traded. So you kind of see how this is kind of a curve, and it's got a little lump on the middle lower part of the bar, and then very thin volume on the bottom. So just looking at how volume distributes across a given thing, here, this is kind of nice because you see super low volume on the bottom, very small horizontal bars, really big at the top. And people call this a P-shaped profile. I didn't do a great job of drawing this, but obviously because you got a little bump at the top here, this is a B-shaped profile. It's the opposite. It's thin volume at the top, heavy volume at the bottom. And this is, people will say like P is bullish because, okay, all the volume's up here. That means people are trading at higher prices, which means they're willing to keep trading at higher prices. Some people say, and this is also where context comes in, and just like kind of test and decide what it means for you. Some people say this can be bearish because if you're in a reversal and it's coming up to the top and you hit the top and you hit a P profile, either people are taking off open positions, so they're hitting stops up here. That's why there's all this volume, probably at a key level or a high or something. And if you see it go down, you also could here's the thing, it could also be buyers, like what I just said with it going bullish. It could still be buyers up here, but then if buyers are getting trapped up here and it goes down, those buyers are going to have to sell to stop themselves out lower and lower. So again, it's not, unfortunately, I wish it was a little simpler. We'd all be millionaires, but just everything is not straightforward in trading. Everything's a little ambiguous. You just got to use context. That's why we have context. That's why you don't trade on one indicator or one signal, blah, blah. So that's volume shape, profile shape of the candle. Point of control. This one, not people of color. Point of control. You see these yellow boxes I mentioned before, but this is where hey, you know what? Let me jump back to shape really fast because this was an example of a P profile. And this one turned out to be bullish. And you see how all the volume's at the top, super thin at the bottom. Aggressive sellers on this side, market sellers are on the left side. And they're just not, it's kind of thinning out at the bottom. And there's just more volume up here. Okay. That's shape. So point of control is these yellow boxes. All it is what level the most volume was traded at. And here's an example too, like we kind of just said with the shape. This is like a big P profile, but it doesn't go higher. So maybe people were buying somewhere down here and then selling up at this top up here. Maybe it doesn't really look like a trap because it didn't sell off like crazy. I mean, it could be. You would think you would see more volume kind of at this price level, maybe where people had to stop. But if this is people market buying at the top, you might see a lot more selling down here. Is that I don't know, 100%. I'm not, traps are a little advanced. I'm not, I love traps, but I'm not a trap guy, Does that make sense? So that's point of control. And when does it become significant? Point of control, the yellow boxes. One thing that happens is it kind of signifies support when you have, or resistance, when you have them lined up next to each other like this. And the more you have lined up and within like a couple ticks of each other, the more likely it is that that's probably an area that people are defending, people are seeing as significant, people are getting in and out. Doesn't really matter. It can mark a support or resistance zone. The other thing about point of control is it moving between candles? So you see points of control there's a little bit of a range here. It makes a big jump down. Having a gap isn't crazy because depending on like your range for the day, like it might move around a lot between candles, but I think it's a nice little confluence to have. You have a gap down, gaps down again, and then what happens? It hits the same exact price, the same tick, and then the next point of control is way up here. So it kind of flipped, it reversed, it jumped way up, and again with all the other confluences that translates into a bullish joint. Point of control, people of color, people of control, value area. Okay, this is another nice little volume profile thing. This is the last one. So on this chart, I have it drawn as these yellow dash lines. And what a value area is simply where 70%, 68 to 70, you can change it, but 68 to 70% of the volume took place within a candle, within wherever you're drawing it. So there's volume out, if we pretend these are the candles, there's volume out here. There's a little bit of volume out here, but 70% of people were trading in here. So this is usually where you'll see bigger bars. And as with point of control, you want to look to how did value area shift from bar to bar. And you might have value areas next to each other where the next one's inside and like the bar is kind of consolidating. You might have the next one outside. I don't know what that means. Just, volatility. Who knows? You might have the next value area just like a stair step. Just a nice little moderate movement in one direction. You might have a big candle like this, and then the value area is way up here. What does that mean? There's thin volume in here, and price in relation to volume, price doesn't hang out where there's thin volume. Price, by definition, is where people were trading a lot. So if there's a lot of volume down here, and then there's a huge gap, that means price just shot through here and moved into up here. So that, again, with confluences, that can be very bullish or bearish, directional. You might have, kind of similar to point of controls, you could kind of just have them next to each other. And people don't see this as much as like a supply and, the demand. Oh my goodness. Somebody didn't sleep last night as a support and resistance thing. The same way that point of controls next to one another signifies. I think like the more you can stratify like what's super important, because there are a ton of concepts to look at here. Obviously, there's a lot of numbers and shit, but the more you can whittle it down, the better. Okay. To what's it? So if value area resistance if you find in your back testing that this doesn't really like translate to resistance, but point of control resistance does, just ignore it. Just take it out and focus on point of control, you know? So kind of find the facet of find which one of these makes sense to you, which one that when you back test synchronizes with other confluences, you know, that's value area. I think we have in this picture. Okay, so in these, it's the purple lines. It was different, the value area. So, well, here's an example of not necessarily forming support, but not necessarily finding support, but hang on. Not necessarily becoming like a support area, but price found support, volume found support at this level, because you see that these two value areas were exactly at the same level. Point of control was within a tick from each other. And if it's coming down from here and you find this stalling like this, it could reverse. And the next thing that happens is you get a little bit of a gap, nothing crazy, a little more of a gap. And then that kind of stair step thing I showed you with these purple lines representing the value area going up and up and up. This is a little better value areas, just looking at the purple boxes. So it's kind of interesting too, because here you have this range represented by value area, just pretty much staying in the same spot. It goes down, it gaps down, it goes down again, not quite as much as it did between these two bars, goes down again, comes up a little bit, and then it makes a nice big gap up. And with all the confluences we see here, this is a nice place to go north. Here I haven't done a ton of analysis, so like there's certainly signals to go short on this one. There's a delta divergence. There is this gap in value area and point of control. It's a B shape, so all the volume's at the bottom. There's not as much volume at the top, so you can kind of get faked out. I don't know if I don't have a solid strategy yet, so I don't know if this would be something. Ideally, you build your strategy so that like you don't get pulled into fake outs. You have some strict rules that will keep you out of that sort of thing. Okay, let's keep moving. Imbalances. I feel like imbalances gets thrown around a lot. Maybe, I don't know. And it could be something that's talked about in ICT, which ICT is a bunch of bullshit, guys. Don't forget. But I know one big thing in ICT is the fair value gaps. And it never made sense to me, because I'm like, why would you? Yeah, it's a bullish sign. So what a fair value gap is, for if you're lucky enough to not know what ICT is you had kind of a big hello. Okay. Yeah, let's just say you had kind of a big move, and it's similar to supply and demand, really, except with ICT, they're focused on this gap between the candles, the big move, the body of the candle, And then I think they look for a price to come down and bounce or to break through. So it's in weird ways, it's kind of supply and demand-ish. It's like, where was there a big move? Can we look for a bounce there? And I never understood. I was like, why would it be in the middle of the candle? But really, like, Jesus Christ, first time using paint, buddy? I think so. And then I started looking into order flow, and I noticed that there are these things called thin prints, which we'll get into later a little bit, where there's very little volume kind of in the middle of this candle. And if you extend those areas of thin volume, you can find sometimes that price does come back and bounce off of that. And I was like, okay, well, that kind of makes a fair value gap make a little bit of sense. But if you're just looking at the price can shoot up without the thin prints. You want like really, really like 0 to 1 contract traded at that level. Sorry, another tangent. Imbalances. So imbalance this is a beautiful representation of the order flow ladder. Just this side is bid, this side is ask. You read it diagonally like this, up and to the right from the left side, or down and to the left from the right side. And when you're comparing those, if you see something, I think the industry standard was like 400 times, 400%. No, 400 times. No, 400%. It's 4 times. That's confusing. If this number is this much bigger than this number, it's considered an imbalance. And this is another one that you can change the settings on pretty much anything that shows footprint bars or number bars or volumetric bars. If you mess with the settings, you'll find this. Some people use 300. I think there's already a shitload. I think we should try to be strict. And you can already see these red and green horizontal bars stretching across the screen. Those are areas where there were imbalances. So just if we take a look, this red one, this was a sell imbalance because 51 is more than 4 times 2. Let's find another one here. There's 2, and this is a stacked imbalance. Okay. And obviously doesn't always lead to a bullish move. You did get a nice pump up, but then obviously something happened and there was a big wick up top here. So, but just looking at how the imbalances are formed, 54 compared to 2, more than 4 times. So the level 54 on the ask is considered an imbalance level for that candle. 26, obviously more than 0, but I think it just calculates it, comparing it to 1 or whatever. 26 would be more than 4 times 1. So another bullish imbalance level because the imbalance favors the right side, the ask. I think I'll go in and like make an explanation kind of because the understanding of like the ladder itself, it took me a while to get, and I still kind of don't fluently speak that language, so I'll try to drop that in for this primer. Those are imbalances, and this is just a drawing here of how, say, some stacked imbalances happen in this candle. You extend that level further. Sometimes price will go up, come down, bounce off that bitch. And you'll notice this looks suspiciously like a demand zone that saw a bounce. So this is all just the same shit. This is the same shit. Fair value gas, supply and demand zones, resistance, thin print, whatever. In a sense, it's kind of all the same shit. Okay, so it's kind of stupid when people are like, that doesn't work. Really, anything works, buddy, here. But not really. I should make a video on the philosophy of being autistic and trading. But that's it. Those are kind of like the core things I'm looking at right now. And you really just got to backtest and see what works, because sometimes sometimes I've seen a good setup and so you can't cherry pick. You can look at the good setups. You can look at the good bounces like the ones that I marked up here. And here. But the fact is, like we looked at, this was kind of a convincing bearish move down. So I think because this was a range, I think like finding small reversals might be a little better than just finding it anywhere. So like if it's coming out of a range, maybe that's not the time to look at footprint chart. If it's moving up and like just signs of price running out up here, price running out down, like sellers giving up down here. Well, let's look at this because we have our concepts, right? Delta, volume profile, imbalances. Let's look at delta first. Okay. I think I explained this one, but price has been moving down. These 3 bars are making new lows and they're red, but what happens between this bar and this bar? You get a big positive lift in delta. What happens to the next one? Another nice big lift in delta. Okay. So that's why I'm interested in this area. And on the 1 minute, maybe you look at two candles to signal your trade. Who knows? So that's the delta in this situation. Let's look at the volume profile in this situation. P-shaped profile. If we're looking at this one specifically, thin volume at the bottom, where aggressive sellers would be coming in on the bid, the left side. Thin volume at the bottom, heavy volume at the top. That's the profile. I'm going to try not to get ahead of myself. That's the shape. Point of control. After a big gap down, it only goes down a tick. So very little change in point of control. You can almost constitute that as like the formation of the support. And then the next candle, it jumps up a little bit. Value area. Again, jumps down. The purple lines, look at the purple lines. Value area stays exactly the same. Maybe this is the bottom, right? People aren't pushing heavy volume lower than this value area here. And then it jumps up a little bit too in the next one. Okay, that's value area. Imbalance house. This one's nice. The other one doesn't have it, but this one's nice because I think this is actually the first thing I looked at on this one. So 2 stacked imbalance. And one imbalance isn't really great. You want to look at 2 or more. And remember how we're reading this. On the left side, we're reading it up and to the right. So this 44 is more than 4 times 0 or 1, because you can't, 25 is more than 4 times 0 or 1. So these 2 levels on the ask, we mark as imbalances because it's just it's just saying ask volume was much heavier at these levels than bid volume. Which ask includes aggressive market buyers, people who get into the market even if the price is going to be a little higher because they want to buy. They want to buy now. And then for imbalances too, within this candle, we actually have a couple of bearish imbalances right here near the top. I think if they were lower, that would be more bearish, but they're pretty high. We have one bullish imbalance. In this candle, we have 2 more bullish imbalances. That's pretty nice. So yeah, that's the imbalances there. And the big thing is this bounce. Sometimes it'll eat through it and then come back up still. Sometimes it'll just completely ignore it. That's the imbalance. So that's what made this look like a good trade, is the shifting delta, the volume profile kind of finding a base here and then jumping up, the bounce off of this imbalance area, the profile creating a P. You know, these are all good things for this to go north. So let's look at the extras here. And I'm not saying they're extras because they can't form the core of a strategy. If you look at order flows, this guy, Michael Valtos, he's one of those people who I can't tell if he's an actual trader or not. I don't know. He's just, for years and years and years, he's been peddling his order flow software on NinjaTrader, which, honestly, guys, I'm not trying to blow up anyone's spot, but you can just go on Chat GPT and say, hey, how do I program this shit into NinjaTrader? And it'll fucking tell you. It'll tell you. I don't feel like, great, make a living, dude, but like, he's charging $1 bajillion for, you know, some bullshit you could do for yourself. And new traders get caught up in that and waste a lot of money on that shit. And that sucks. The good thing about this guy, and this is true, I feel like of plenty of trading channels, is he has a lot of free order flow content on YouTube. So just look at the videos. I've looked at a bunch of videos. Look at his videos, look at his videos, look at his videos. Don't buy his program. And and there's a lot. Actually, I'll link a couple of things. There's one video that explains how to actually look at order flow so freaking well. Like it's an hour long, but it's really good. This is just kind of a primer for like to show you what I'm going to be looking at in backtesting on this channel going forward. Yeah, another tangent. Love it. So thin prints are, like I said, this is kind of a thin print where just very low volume at a certain level. And again, like when there's low volume, price just sweeps up through it because nobody's trading that. Price represents areas that were traded. That's a thin print and kind of similar to imbalances here. It can be looked at as like a level to bounce or breakthrough, whatever. Ratios are actually created by that guy, Michael Valtos, the chill. It's so conflicting because it's like, thank you for all the free shit. And he has a PDF too, like a 150-page PDF. It's like, thank you for all the free shit, but also kind of a scammer. I don't know. But so this guy started looking at ratios, which in a bullish bar. So let's say there's a bullish bar. It is, I believe. You're looking at the bottom two bid numbers. And you're dividing the top, again, this is in a bullish bar, the top one by the bottom one on the bid. So 9 divided by 29, 0.31. And anything, I believe, under about 0.7, 0.68 to 0.7, anything under that is a good sign for a reversal. If I don't know if it's like universally bullish. I think on a bullish bar, that means it's bullish. And then you can do the same thing on the other side where you're looking at the ask instead on a bearish candle, and you're dividing the bottom one by the top one, top ask. And with your X, so this one would be 4.6, but what you're looking for is greater than 30 for a bearish reversal. So I'm not going to go dividing all of these, but that's what ratios are. And it's just a confluence to, he says, if you see delta divergence in a ratio, take the trade. I think that's a little reductive, but it could be a good place to start with your strategy. I mean, just test it out, try it. Those are ratios. Exhaustion and absorption are actually pretty important. These are all things I kind of want to find or build indicators for using ChatGPT, because you can pretty much just code anything now as a layman. Exhaustion, absorption, it's just the volume that's happening at the extremes of candles. So this isn't, I'm just looking at this candle because it has a good example. Look at the one up here. There was nothing. This is thin at the top. And you do see you kind of get a push down. This wouldn't be a good confluence because it's just in the middle of all this mess. If you see this at the top of at like a new highlight with some other confluences, that's a good place to start looking to go short, and vice versa. And here's a little exhaustion at the bottom there. Absorption, I don't want to speak on it technically, but basically it's just when price is going up, and you can see this on the heat map too, on book map. Say there's a level up here and price goes up into a level. Hello. Let's say this is a key level for whatever reason. Maybe you've identified a lot of volume here. Maybe it's a high. I don't know. But when price comes up here, ignore the numbers, and hits this, if you see a shitload of buyers, aggressive buyers on the bid at this level, and price doesn't move further up or only moves a little bit and comes back down, despite all that buying, that's a sign that there's a lot of probably passive sellers with orders resting at the same level. And there's just way too many for the buyers to take over. Then the buyers get trapped if price moves lower, and yeah. So it's just like the strength of a level. And that's it. This is probably long enough. This is way too long. Holy shit. Yeah, I'll stick a little like brief introduction, and I feel like you don't need to. I don't know. Yeah, I will. Okay. Bye. Look out for backtesting. We'll be doing some thorough backtesting on that. Yes. I'm very excited. We're going to look at the reason. We're going to see why price moves. We're going to look at entries, baby. Okay? Bye. Okay.